Access Bank's Q3 revenue grew by 42% to 257 billion naira, while profit before tax jumped 45% to 60 billion naira. Transcorp posted a decline of 3.1% in revenue to 30.4 billion naira, while profit before tax slumped 27% to 7.2 billion naira. And Sinoma International Engineering signs contract on cement project worth $386 million with Nigeria's Ibeto Cement Company. That's according to Reuters. Hello, you're watching BTVA's Business Nigeria for Wednesday, October 21st. I am TUNJI Andrews, and on the show today, the equity market breaks a two-day winning streak, and the cement sector is on our radar, especially the news of the $386 million deal between Sinoma International and Ibeto Cement Company. But first, let's see how the equities markets closed today. Tosi, what's the picture like? Green or red?
TUNJI, it's the earnings season, and we've seen three companies release their result: Access Bank, Northern Nigerian Flour, and Transcorp. But before we dig into those numbers, let's see how the market fared. The market did not extend its gains from the two consecutive days. The all-share index inched lower by about 0.4% to close at 30,199 points. Who are the key draggers and the key movers in the sector? Dangote Cement, the heavyweight, it dragged down that index by about 4 naira 40 kobo. It closed at 164 naira 55 kobo. Likewise, WAPCO lost 50 kobo to close at 98 naira 99 kobo. We also have Transcorp on one of the key movers list. It lost 4 kobo to close at 2 naira 8 kobo. This is on the back of its weak result. Let's quickly get into those numbers. Transcorp lost about 3.1% in its revenue. Its profit after tax was equally down by about 29% to close at 5.88 billion naira. The profitability is under pressure. This is due to its increase in finance cost. Finance cost surged by about 42%. Likewise, its cost of sales, it grew aggressively by about 19%, while revenue dropped by a mere 3.1%. So now this just goes to show you about how Transcorp is struggling with its cost containment. And we had a similar result in the first half of the year. How did the market react to this? The market lost about 4 naira, that is 1.89%, currently trading at 2 naira 8 kobo, very close to its 52-week low of 1 naira 92 kobo. Now let's move to the banking stock, Access Bank. Access Bank's gross earning, it's up by 42%, 257 billion naira gross revenue, while its profit after tax was up by 45%, 60.3 billion naira. It seems to mirror the result of UBA. UBA also posted a profit after tax gain of 44%. I mean, is this setting the tone for the banking sector? Are we expecting similar results from Zenith Bank, from Union Bank perhaps, or from all the other tier 1 and tier 2 players? Let's dig into those numbers. You know, on the surface, it looks like a brilliant result. However, when we get into it, something jumps out at me. The other income gained 198% to 75.5 billion naira. Wait, let's get into it. 25.5 billion naira was the other income in Q3 2014. In Q3 2015, we have 75.5 billion naira, meaning this quarter alone, other income contributed 50 billion naira to its bottom line. Out of the 60 billion that we have as profit after tax, 50 billion of it comes from other income. Is this sustainable? For how long can it keep posting results like that? That was the game changer. On average, its other income grows by 48%. If it had grown at that rate, we would have seen other income at 38 billion naira. So that profit after tax would have just been about 25 billion, and its profit would have been less. If it grew about at 100%, the profit would have been flat. The question now is, can it be sustained? I guess we have to wait to see. The market reacted by gaining 0.8%, and it's currently trading at 4 naira 99 kobo. And that is it from me, Tunji.
Thanks, Tosi, and good numbers there from Access Bank. We will be digging deeper into these numbers and the overall market space with ADEGBOYEGA ADEBAJO, CEO, West Atlantic and Resource House, in just a bit. Do not go anywhere. This is still Business Nigeria. The index, as we know it, shed 0.43% today. However, there are some positives. We saw Access Bank release good numbers, revenue up by 42% to 257 billion naira. Anyway, I'm joined by ADEGBOYEGA ADEBAJO, CEO, West Atlantic and Resource House. Thanks for joining us, Boyega.
Yes,
welcome to the show.
Hi,
when you saw these numbers, what exactly came to your mind?
Well, it was interesting. You get the feeling of being pleased at the positive results coming out of the market.
Yes, true.
Especially when you think about the way the entire year has been, with the lull in everything simply because of the elections. But then let's look at the details. Access Bank has been quite mindful of the model and the way it wants to play the market this year. Interest income still has about 60% of the entire growth.
Yeah.
But non-interest income, it's an interesting 40%. It could almost be 50-50. And what's perhaps critical there is that non-interest income grew by 100%.
Wow.
Some of the income has come from a reclassification of tradable instruments. But what this tells you is that banks are beginning to actually look at their balance sheet and trying to extract as much efficiency.
Sweat the assets as possible. But, you know, if you look at the numbers, there's other income.
Yeah.
And I mean, this is not the first result we're seeing other income. It's beginning to become recurrent everywhere.
Definitely.
And other income seems to be what mostly pushes everybody over the line into profitability. I mean, what comes to mind when we see other income? And basically, is it something that we believe can be sustainable to always give us profitability in the business?
Well, it can be sustainable, but then it depends on how the economy changes. You've got to bear in mind that on one side, risk assets are being created, and they are risky assets, which is why they're called that. And the other side are the safer investments that are tradable, that earn a certain income. There's a greater tendency for banks to want to shift a bit more to that end right now. For as long as the economy has that lull, you wouldn't see a more than ordinary growth in terms of creating new risk assets. But some of it will be created, and we've seen a certain percentage of new risk assets.
Speaking about the lull, and then we're seeing also impairment charge rising across board in that sector of the banking space. What is your expectations for Access Bank Q4 expected in January?
Well, I think Access are they're going to be pretty stable for the next quarter. You want to think back about it. There's a rights issue that's been concluded, so there's some pretty new capital in there.
Pushing into the market.
Yes, exactly. It's not a charge. It doesn't have a charge beyond the dividends or the capital charge it will pay. So that will be applied in terms of where the bank sees as being able to earn the kind of income they require. And when you look at the half year to 2015 and you look at Q3 2015, you'll notice that there's been a trend.
Yes, that's true.
I have no reason to expect that trend to change.
So basically what you're trying to say is, because if you look at Q1 numbers, you see that most of the banking sector stocks, their results were similar. Look at Q2, they were similar. So we're saying that Q3 Access Bank is, UBA started, Access Bank is following. Are we going to see a lot more of that?
We will see it because they'll always respond to how the market is configured. Play the market, push the money to where the money is safer, and hold the money when they feel it's not too safe to let it out there.
Well, let's talk about Transcorp. It's one of those companies that, you know, is a wonder of sorts. It's supposed to be our conglomerate, yes. But we continue to see a decline in bottom line. I mean, we've seen that consecutively for the third quarter now. I mean, how long can we continue to contain costs?
Well, looking at the group results in itself, there was a sharp increase around the half year, about 95% in terms of short-term and overdraft charges. were actually overdraft raised. So that tells you that their interest costs are going up. I did also notice that the inventories rose by 123% half year. Now, working capital at the same time dropped. Now, you want to be mindful with the conglomerate, because in that conglomerate, you could have some companies that are doing pretty well.
Yes,
you could have some that are
not
dragging
doing,
the entire
okay, so you can
group down.
see the Transcorp hotels is doing
exactly.
well.
So we're going to need to break it down. And this is what happened years back in the States, when a lot of companies had to start breaking up the conglomerates. You don't want to spread your resources so far. It's a pretty wide economy, and just as some activities may be hit by the law, some are counter-cyclical and will always do well.
Well, let's look at the overall market. We saw that Monday and Tuesday, we saw gains. I mean, that has been broken by today. We saw the likes of Forte or Zenith Bank Livestock pushing the market in the first couple of days. But today we see a decline, and that has been the consistent trend for the last 6, 7, or even 8 weeks as it is on the market. 2 days of gains, 1 day of losses, maybe 3 days of losses more. I mean, how long are we going to continue the market like this?
You know, when you say that and you're not talking about the market, you could almost be talking about the economy of the country itself this year. So, and people do say that the capital market is a barometer of the economy. I think that just says a lot about what it is. There's not too much cash in the system, you know, one tends to hear. There's pressure in some areas. The oil and gas sector isn't bringing in as much foreign exchange as it should bring in. And the banks themselves are so tight where credit creation is concerned. A lot of money is being pushed into retail. So all these things come out to play. And yes, there is a need to drive up the capital market, because companies are creating value. Yeah. So you will see that when, you know, you see that increase in the index. Anyways,
we'll beg you to still stay with us, because our own ADEGBOYEGA is going to be running us through events in the cement industry, and I would like you to join that discussion. So when we do come back, we'll be talking with ADEGBOYEGA of Btva, and he's going to be running us through the cement industry numbers. Do stay with us. You're watching BTVA's Business Nigeria, and I am Tunji Andrew. Still with me is ADEBOYEGA ADEBAJO, CEO, West Atlantic and Resource House. Sinoma International Engineering signed a contract on a cement project worth $386 million with Nigeria's Ibeto Cement Company. That's according to Reuters. However, ADEGBOYEGA of BTVA, ADEGBOYEGA OLATUNDE, head research, has been tracking that sector. Boyega, what is the story around the recession in that space? I mean, because we've not been seeing as beautiful numbers as we used to see.
Well, Tunji, before we get into that, let me provide a backdrop. Now, the first thing is global production capacity for the cement industry, as you can see, is skewed towards Asia. A large proportion of that is China. Now, on the next slide, you would see how it tails off in Africa. Now, in Africa, or Middle Eastern Africa, a lot of it is skewed towards Lafarge and Holcim. They're the two largest, because it's a combined entity now, and Dangote Cement comes in as number 2. Now, the third slide, so the two biggest players in Africa are Holcim and Dangote Cement. Now, before we start drilling into the next slide, that's Nigeria, the key players that you have are Dangote Cement, Lafarge Africa, and CCNN. On the next slide, installed capacity for the three is 34 million metric tons for Lafarge, 34 million metric tons for Dangote Cement, 12 million metric tons for Lafarge, and about 0.9 million metric tons for CCNN. Now, there are other players, but they're generally small players. Ibeto Group, for instance, has 1.5 million installed production capacity. But for Ibeto Group, you should remember that there was some hullabaloo about 2 or 3 years ago that they were the only people importing cement while others were spending money building. So Ibeto Group has also taken a cue from that and has decided to build a plant. We haven't received any guidance from management regarding the exact location, but we can only speculate that they were intent on building a 5 million metric ton plant in Effium in Ebonyi State. So we can assume that that Sinoma deal is the plant that they intend building.
I mean, from the numbers you showed us of Africa, you could see that Dangote is up against an African company in terms of Lafarge, basically. And most of those numbers from Dangote came from Nigeria. So basically, if Dangote is successful on his sojourn across Africa, then we could see a bigger war
surprisingly,
on the African plane.
Taking a look at these numbers, you will be surprised that revenue is about 242 billion. 86% of that is from Nigeria. Profit is about 128 billion. 92% of that is from Nigeria. So once you ramp up the rest of Africa, then obviously these numbers would show significant improvement.
But how come is it that Dangote happens to continuously be the biggest player on the Nigerian front?
Well, the thing is, for him, he started out basically as... So the thing is, for him, he basically started out as an importer of cement, but he realized the potential is in production. Now, his major competitor was WAPCO, or Lafarge, as we have it. Now, WAPCO was split into two separate companies then, which was WAPCO, and Lafarge was split into two companies then, which was WAPCO and Ashaka Cement. And you had a lot of small players. You had BCC. So his first foray was to acquire BCC. And from that, he had Obajana, which had obviously a very large quarry of limestone. So based on that, it was for him a sector play. You know what? Who are my competitors and how much capacity can I develop within this space? And before you know it, unfortunately, as at the time he was investing money, I would basically say WAPCO at one point basically sat on, WAPCO or Lafarge basically sat on their hands and felt he's not a threat.
But the recession now. How is it affecting Dangote? Because I mean that's our concern. He's employing Nigerians. He's creating a huge impact on GDP. That's our concern. How's the recession affecting?
Now the thing is, the cement sector itself, that subsector itself, accounts for about what 11.3% of GDP, and that was in 2013. Employment figures, it's responsible for about 1.6 million jobs in the country. Now what you would see is, the more you increase capacity, obviously because cement production is very labor intensive, you would expect that both from semi-skilled labor to upper tiers of management, you would expect that obviously once he ramps up production, then you're likely going to see improvements.
Well, you know, you do say that, but I'm thinking here, right? The outlook is we've still got a lot to do with infrastructure, and that typically is where the demand for cement comes from. But with the drop in the foreign reserves now and the difficulty in terms of seeing realization of infrastructure, don't you expect a drop in the local demand for cement?
True, I do. In any developing or emerging economy, government is always the largest consumer of cement. That is simply because you require cement for infrastructure, roads, hospitals, bridges. Then the remainder of cement consumption is usually private consumption, usually to build offices or residences. But Nigeria, we currently have a housing cap of about 17 million units. That should be filled by a demand that should obviously go to a demand in cement. But if you have substantial issues economically, where a lot of your recurrent expenditure on capital projects is likely going to shrink, then you will not likely see an increase in the demand for cement.
Well, basically, with the talk about Dangote saying that we should build our roads with cement instead of bitumen, I just hope that that would basically be...
Well, that's about creating another channel.
Another channel for making money. Basically, because that was what I heard from...
There has been an argument. There has been an argument. Bitumen versus concrete. Bitumen versus cement. They'll tell you cement is low maintenance, really.
Thank you very much, ADEGBOYEGA. We really appreciate that. Also, thank you very much, ADEGBOYEGA, ADEBAJO, West Atlantic Resource House CEO. After the break, we look at the macroeconomic picture of the country with KAYODE TINUOYE, UBA Capital Research Team Leader. Do not go anywhere. This is Business Nigeria. Welcome back. You're still watching Business Nigeria, and I am Tunji Andrews to look at the concerns of foreign investments in Nigeria, as well as issues around the Naira, the short and long-term implications. I am joined by KAYODE TINUOYE, United Capital Research Team Leader. Thanks for joining us, KAYODE. Welcome to the show. Basically, we are hearing about Barclays Bank, having a meeting, considering exiting Nigeria from its own emerging market bond index. That's after the JP Morgan issue. I mean, let's start from the whole implication of these indexes to start with. Let's look at JP Morgan, where they added us to the index in about 2012. What was the impact on the market in terms of capital importation into Nigeria? Was it significant?
Yeah, it was significant from the figures that came through after that announcement. Even before the foreign investors started looking inward into Nigeria and making investment, actual investment. When that announcement was made, I think around about 300 basis points was added to bond yields in Nigeria. So it had so much impact because those monies came in.
So now looking at this fact that, JP Morgan first, now Barclays Bank, how does this paint Nigeria on the global scene?
Well, I think it's more of a reputational issue for us as a country, even though the government has come out to say that they would rather have FDIs as opposed to FPIs. But some of us have said that in a situation where your foreign exchange situation is at a very precarious state, you need all the money you can to support your currency. So in terms of the impact on the economy, like I said before, it's more of a reputational issue. Emerging markets now are at the receiving end of some of the weaknesses that we're seeing in China and even the U.S. economy trying to find its footing. So if your economy is not competitive enough in terms of exchange rates, transparency, and the relative ease of transaction within your domestic market, you're not going to get much of those funds.
Speaking about competitive advantage, China has devalued, Russia has continued to has devalued. All such markets around the world that have been hit by the commodities issue of recent have devalued their currency on a consistent basis. Speaking about Nigeria now, the biggest, the elephant in the room is, should we devalue or not?
Well, I think fundamentally, you want to believe that there is no other way in the short term out of this quagmire that we found ourselves. So we need to make some exchange rate adjustment. Now, we go back to the JP Morgan index story. There are about 16 countries on that index. Nigeria has the most restrictive foreign exchange policy within that mix. So the controls are just too much for foreign investors to stomach. And they're really looking at, okay, we like Nigeria. Nigeria is a promising economy, but we need to be able to transact our business and move our money out.
You did see that from the fact that JP Morgan gave us an extension of the deadline. That just kind of shows you that we really want to keep you, but just fix your house in order. But how much of that money, how much liquidity has exited Nigeria since the JP Morgan issue?
I think it's also important to note that that liquidity that you talked about actually started to exit as far back as January this year, right before the election. So I would estimate to around about 80% of the total exits from the first announcement and now exited before the elections. So when we had that last announcement a couple of months back, we really didn't have so much in the system because really foreign investors who track Nigerian bonds, most of them are active investors. And very few, small percentage are passive investors. So those who were still around as at 2-3 months ago were passive investors. And most of them had already even moved on. You know, the removal is in phases. So the first phase has been concluded and then moved that. So we have very little left now.
Well, Speaking about exiting of liquidity, we saw that the exit of the liquidity was on one hand. The CBN's MPC reacted by cutting CRR from 31% to 25% to try and create some stimulus into the system. And right now, it seems that we're a bit awash with money. Although, on the other hand, we've not been having OMO of recent. But what level of liquidity do you think is right for the economy to keep moving forward? Noting that we do not have the FPI as it was before.
Well, I think with respect to the level of liquidity, you really cannot say in actual terms how much of the quantum of liquidity you need. It depends on the target that the CBN has set for themselves. So before, in the last 2-3 years, it's been 6 to 9% inflation target for the CBN. We've seen that target breached now. We're forecasting 9.6% for inflation in the next 2 months. So that takes us very close to double-digit levels. So the kind of liquidity we have now, although short-term, as most of us have seen, because OMO auctions have not been going on in the last 3 months, and even the ones that came up in the last before the CRR adjustment resulted in no sales. So because the market was looking for higher rates and CBN was very much not inclined to give them that. So the level of liquidity that we have in the system now needs to be controlled by the CBN because of the pressure and inflation. Mind you, there's a pressure on the foreign exchange on the one side. I was looking at the level of reserves yesterday and today. If we continue with the rate of reduction that we've seen in the last 1 month, before we get to December, we have reserves at $29 billion. That is very key. So we will be down below the psychological level. So that level of liquidity in the system is not healthy at the moment because, one, on inflation and the pressure on the currency. Well,
you did hear City of Lagos. He did predict 9.6%. We're going to be holding him to that. But do stay with us, Kayode. We will still be talking a little more about the economy. Do not go anywhere. This is still Business Nigeria. Still with me in the studio is Kayode TINUOYE, and we have been looking at the fiscal side of things. But let's quickly look at the equity space for the last time today. Tosi, you have been tracking some of the key movers from the previous week. How are they faring?
Yes, Tunji, I have been tracking Okomu Oil. As of today, Okomu Oil is the 4th best performing stock on the Nigerian Stock Exchange. It has gained 40.5% year to date. But before we get into that, I just want to touch briefly on the agriculture sector. The agriculture sector contributes about 18% to the nominal GDP. This is as of the Q2 2015. Yes, we have players such as Presco Oil, Livestock, Okomu Oil. However, this sector is underrepresented on the Nigerian Stock Exchange. How did Okomu Oil perform? Last week, we saw such a rally. It rallied about 27%, but today it's an hibernation. Likewise, yesterday, it was almost as if Livestock took the baton from it, as Livestock gained about 4% yesterday. Now, let's look at this, right? Okomu Oil's turnover in the first half of the year grew marginally by about 2.5%. This also, it completed its oil mill. The oil mill will effectively double its capacity, currently producing 60 tons per hour. We'll see how those improved productivity and improved numbers feed into the numbers before the end of the year. And yes, that is the stock I have my eyes on. I'm keeping an eye out on the agriculture sector and see how it goes before the year closes.
Well, Kayode, the equities market, it closed down today. Monday was up, Tuesday it was up, today is down. I mean, you can't really separate it from the fiscal angle of things. I mean, you can't separate it from the economy. If the presidency, the government, they're not doing what they should do, things will not happen on the equity side. When do we think this circle is going to end? Because it looks like we've cloaked ourselves with a dark cloud and we're not getting out.
Well, I'll tell you something for free, Tunji. It's been a speculative market in the last 6 months, and I think it's going to remain so for the rest of the year because the macroeconomic picture is not looking impressive. although in the last 2 weeks we've seen some gains in the market. If you recall, last week it was up about two times. This week, yesterday was up. On Monday was up. And now people are taking profit. And that's what is going to happen going forward.
Okay.
Now, why are we having these short-term spikes in the market? Before now, there was very serious exchange rate concern and speculation. You know, normally there's this nexus between the fixed income and the capital market. When the fixed income is going, market is going down, the capital market seems to pick up. But we didn't have that for a long time because a lot of people were holding cash.
Everybody was hoarding,
So they were holding cash. Now that the risk of FX is somewhat minimal now, a lot of people are beginning to look at the equities market again, and we're seeing that liquidity in the system that is so significant now finding its way into the market. So people, investors, speculators will continue to play the way they have been playing. So there is no respite in sight, at least for the short term.
Speaking about equities, where is your money? What are your favorite equities?
Well, I like the banking sector, and because I've seen quite a bit of so much resilience, I should say, for the banks. We saw Access Bank result come through, very impressive, even though most of that came from non-interest income, and then when you back out a lot of these derivative income that we've seen banks record in recent times. But even stripping out that, the performance is still
not that bad,
not bad compared to the headwinds that we've seen. I expect the likes of Zenith and GTB, the top-tier banks who have been more resilient among the pack of banks that we have. So I like the banks because, first, they've been resilient. Second, the valuations are very attractive. An average of 0.4 times book, you can't get that anywhere else. So the banks look very attractive at the moment. A few consumer names are also very attractive. I think flour mills have been very severely beaten in the last 6 months. So that price looks very attractive from a valuations perspective. And a lot of restructuring and investment is going on, even though we've not seen the impact. But going forward, in the medium to long term, we will begin to see those.
So you've heard him, his money is in the banking space. Thank you very much, KAYODE TINUOYE, United Capital Head of Research. Thank you very much for joining us. And then you do know that you can follow us on Twitter at Btva Newsroom, and you could hashtag Business Nigeria. Join us again tomorrow where we bring you premium business coverage like never before. I am TUNJI Andrews. Until the next time, stay safe.